Good afternoon, everyone. Thank you for joining us. Welcome to the Kaleidoscope of Banking Services event organized by the SFA RAS Sub-Committee. So a quick introduction to the SFA RAS Sub-Committee. It's this new subcommittee that we created, and we want to promote the adoption of technologies to strengthen the capabilities, efficiencies, and governance of the Singapore's money remittance industry. And it will also catalyze the members' digital transformation and internationalization efforts. So my name is Graham. I'm from Thunes and also a member of the SFA RAS Subcommittee. Today, we have a very good session planned with three very experienced speakers. Before I introduce the speakers, I would like to invite Chi Wai, our co-chair, to give a few words. Chi Wai.
Thank you. Hi, thanks, Graham. Hi, everyone. Welcome to this webinar. I'm Chi Wai. I'm in fact the chairman and chairperson of the Remittance Subcommittee, formed by both the SFA and RAS. This is our third webinar. Truly excited to sort of bring in very distinguished speakers. But I would like to give and set the context of why this webinar. I'm sure as practitioners in this cross-border payments and remittance space, I believe many of you will realize that we all have a love-hate relationship with banks and FIs. And banking services often form essential backbone of our businesses, whether they are the CASA, trust accounts, BG, transactional banking, rails, SWIFT, you name it. Many of us cannot function efficiently without them. Hence, there is always a constant concern of debanking and de-risking, but those are topics for another day. In this webinar, I would like to urge the audience to look at banking services with different lenses to understand how you can maximize the new innovations and potentials that banks and FIs can bring to expand your target addressable market and operational efficiency. The theme of this webinar is therefore called the Kaleidoscope of Banking Services. As you can see in my background, it's really about discovering new perspectives and the new applications of these services. So it's my privilege to invite three distinguished speakers whom Graham will introduce later that represents the multiverse of banking services. Please sit back and be inspired. Thank you.
Thank you, Chi Wai. I like how you describe it as the multiverse, which really seems to be the way that the payments landscape is going into. So quickly introduce our first speaker, Kuan Sen. So he's a senior sales leader in DBS Global Transaction Services. He has been with DBS since 2018 and has led and grown the non-bank financial institutions, the NBFI segment, across the franchise, and has built deep regional experience in managing the money service business. So prior to DBS, Winston has 2 decades of comprehensive transaction banking experience in stints at several global banks covering FIs, local corporates, and MNCs. So across cash management, trade finance, and working capital management. So that's long and the short of Winston. We'll let him maybe speak more later. I will quickly introduce the 3 speakers. So the next speaker is Jan Kessler. He's from Aspire. He's the head of sales and with experience in business development, sales, and international expansion. Prior to Aspire, Jan expanded an international insurance provider and launched their Southeast Asian offices in Thailand and Indonesia. So, and then the next speaker, we have Malik from Niam. So Malik develops and manages the Niam's, develops and manages Niam's banking as a service platform and is on a mission to simplify the overall integration and operational experience of Niam's clients. So prior to his role at Niam, Malik was the head of product management for issuing and payments at Wirecard, and before that, MoneyGram and American Express. So thank you to the three speakers for joining us. We'll kick off with Winston. Winston, please.
All right, thank you very much, Graham. Let me get my screen up and running, and then we can get started. Okay. All right, so let me get started. And first of all, welcome and thank you for attending today's webinar. My name is Winston. I'm from the GTS Global Transaction Services team at DBS. And what I really want to do today, is just to share with you what the value of a strong banking partnership is all about. As you know, the payment industry is undergoing and has undergone rapid transformation, both in terms of disruptive change and digitalization, market infrastructure, and regulatory pressures. So what I want to do today is really to share some viewpoint and experiences from both the angle of the bank and payment providers that we have worked with across basic banking services, digitally driven solutions, risk management, and other relationship considerations. Most importantly, the next slide I wanted to show you, it's really about a symbiotic relationship. So what is symbiosis? Is when two parties benefit each other. In this case, the clownfish, they got a special mucus, prevents it from getting stung by the sea anemone. In return, the anemone gets something back in return because the clownfish will attract other fish that the anemone will feast on. So in this case, it clearly benefits both parties. And this is what the art of living together is all about. Nobody in today's world is always going to be competitors and nothing else. A symbiotic relationship is and can be a very useful measure of ecosystem's health. And the ecosystem that we are all in is really in the payment landscape in financial services. Please keep this in mind for the rest of the session, and we'll come back to explore this theme of symbiosis even greater. Okay, so what you see here is a whole host of, no, I won't say a whole host, a sample of banking products for payment companies. You can have operating accounts. We will open a safeguarding account, a client trust account. We give you FX services, bankers guarantees, and these are really the basic stuff. These are really the baseline products and what I would consider the barest minimum that a bank should be able to provide to a payment company. But today's discussion is really not on these products because we'll all be familiar with these products per se. And what I really wanted to go through in more depth is really what should a payment company really look for in a bank? Should a payment company be looking for easy onboarding, the cheapest provider that will do everything for free, or a bank that doesn't ask any questions, no questions asked, everything is okay, all right? The truth is actually what you really want to look out for is a few of these key points that I'll cover. These are actually collated from successful client engagements that I had, client feedback, client conversations. And when we say clarity in the strategy and the outlook when addressing payment companies, it means that when you are looking for a bank, does the bank have deep experience dealing in this particular group of customers? Does the bank have this in and out approach, because one minute they're out because it's too risky, and then another minute they're in, because maybe it's fashionable, and then you realize it's too risky and then they're out again. All right. Have they been allergic to payment companies? Okay. So clarity in the bank in terms of a business strategy and outlook, I think is absolutely important. And the next most important thing is also recognizing that your business is unique. Payment companies, on the nutshell, are largely similar, but every one of the payment companies we have dealt with at DBS, everybody is unique from the way they operate, the client base that they target, which industry, which countries, and more importantly, what is the growth trajectory in that case? Because this leads us to the second last point. Does the bank have a plan to help you scale your growth and expansion? And would they effectively use technology to address efficiency issues, resilience, automation? And we get it, you see, because gone are the days where everybody out there can have a big shared service center with thousands of staff. Most fintechs, most payment companies, they're all running a very, very lean structure. how then can we use technology to help them with it? And most importantly, is really to do it once and do it right. There's a particular client that told me once that they went to bank and opened an account with a particular bank in a particular country, not in Singapore, because they had no choice, because it was the quickest way. But this customer of mine also quickly lamented that there was a total lack of technical connectivity and everything had to be done manually. And another client mentioned that their previous banker didn't understand them. So this is quite serious, because the bank didn't understand them, and more importantly, did not care to understand them. So this is some of the key points that I really wanted to highlight. When you're looking out for a bank, what do you really need to look out for? And on our point of view as a bank, what do we look out for? You know, risk. Banks are all just about risk, correct? The truth is that banks should never and can never ignore or close one eye on this element. But banks cannot be single dimensional and only focus on risk. And the next slides will give you an idea and almost like an inside look on what else a bank really looks out for. First of the line, again, risk. Okay, I will not pretend that this is not important. In fact, it is the most important thing. Clients that don't know that they need a license and ask the bank to tell them whether they need a license, for example, it's a red flag for us, right? I have customers that have reached out to me, hey, we want to open an account with you. And when we ask them, okay, we've got a new payment services act in Singapore. What is your position on that? And then they look at me and they said, I don't know. Can you tell me whether I need a license? So it's a little bit tricky if a payments company does not have any understanding or a position that they take on regulation and licensing requirements. And this is important. I have also had clients that came, or I would say maybe not clients, prospects that came and said, well, regulations can be a little bit gray. And it's like, no, regulations are never gray, all right? They may not be as clearly defined in some markets, but it's there. All right. And when a customer says these things, it doesn't really inspire a lot of confidence. Okay. And what the bank also looks out for is what are your target clients and what are your industries that you service? And most importantly, this is a very important regard, because who are the bank's customers? Is it a payment flow that has layers upon layers, correct? Because sometimes a payment company provides payment services to another payment company that provides payment services to an e-commerce platform that then services third-party marketplaces. So where is the start and the end of every transaction? I think this is a very important thing, and the banks really look out for this, okay? And the robustness of a KYC and AML process must be open to review and scrutiny. And most of our customers, all of our customers, in fact, have been very cooperative on that front. Banks also look out for mutual growth. How we want to grow with you, with payment companies, it comes with a defined plan. It comes with mutual profitability. It cannot be a situation where a bank comes in and then suddenly doesn't charge you anything and then expects to grow together with you. I think it's fairly short term. And in this new world order, in the low interest rate environment, it also suggests that nothing can be really free anymore in that sense. What we aim for is really reasonable pricing so that everybody can realize the value of the relationship. And one of the ways that we can realize this value is by embedding technology. Banks, a good bank, would look to embed technology simply because it helps with quick scale ups, it helps with agility, it helps with automation. With automation, it means less manual work. And that actually translates to less risk to that extent. Less risk for both you and for the bank that is involved. And the last, but the most important part of it, it's about constant communication. We look out for customers or payment companies that are really communicative. If they have a change in their business model, speak to the bank first, all right? If you have a new flow, if payment companies have new flows and new work streams, and we appreciate that a lot of payment companies out there are very agile, they are very dynamic, they move very quickly. Talk to the banker, because this helps build an understanding of your business model, it helps build trust. And it then allows the bank to help you. Essentially, you're really helping the bank to help you. Again, this is along the same theme of symbiosis. Everybody needs to prosper together. I cannot reinforce the fact on technology too much. And that's why on my next slide, I'll just talk a little bit more on digital solutions. Okay. Digital change is really driven by our customers' customers. It's driven by your customers. It is no longer a good to have. It is almost non-negotiable. Keeping pace is, almost barely enough. I'm not trying to be a doomsday messenger, but this is really the reality of it. The DBS Digital Readiness Survey was concluded this year in June. We interviewed around 2,600 corporate treasurers, CEOs, CFOs, business owners across MNCs and SMEs across 13 markets in Asia Pacific, as well as in the US and UK. And these customers that we have interviewed are your customers as well. And the APAC region has witnessed 7 in 10 large corporates and middle market companies with a digital transformation strategy in place. Okay, we did the same survey last year, and the proportion of APAC businesses with a digital strategy was 57%. This year, it's at 70%, and very soon we might see 100% or 90% as the years roll by. So what I wanted to cover off is that when we look at digital solutions and really scaling for growth, we look at your traditional connectivity channels, right? How do you want to interact with the bank? You want to build a host-to-host connection with them. You want to interact with them via SWIFT or simply through an internet banking platform, or you're looking at a very deep treasury integration with your treasury management systems and your cash management systems. So these are fairly traditional, but by no means, right, these are obsolete. So it's very important to realize that the second point I'm talking about, an API-driven solution, may deliver a lot more benefit. It will give you an end-to-end automation spanning payments, FX, and reconciliation, scalable, you can replicate it easily across different countries, and also to integrate with your operational flow. Some customers have come to us and said, we want to do APIs off the bat. That's great. Some customers say, we're not ready because we have invested, for the last 5-10 years on a SWIFT connectivity. But we say, hey, no problem. Because this brings us to the third point, which is, again, are the solutions for here and now or for the future? And the bank must be able to articulate their plan for you and derive off your plan for growth. When you communicate your plan for growth, the bank is able to then say, okay, right, we have this traditional channel. We'll go with that for the next 18 months. We will pilot the API solution, see how that feels. And most important thing in terms of your assessment for a banking partner, there's also two conflicting school of thoughts: immediacy versus future horizons. Are the solutions that are being offered to you for the here and now, are they tried and tested? How many cases have the bank implemented, and how comfortable are you in that regard? In terms of future horizons, what I wanted to say is that banks should also offer an opportunity to co-create bespoke solutions just for you, because your business is unique. And that's bring us to the original point. The bank needs to understand your business model and also to understand your growth trajectory, because this would then create an opportunity to come up with something bespoke at the same time. Just want to go a little bit more about API connectivity. Is becoming extremely common in the marketplace, and the ability to have that kind of end-to-end process automation, I think it's fairly remarkable. We presented a solution to a customer. It was a payments company, and they were in the education space, and they were looking to help universities collect school fees, and because they are like foreign universities, and the students are located in different parts of the world, there's an FX element to it. So we built in a situation where money hits the account, the backend systems get automated, gets updated automatically, and FX is applied, and then a subsequent payment is sent from the student to the university. So all these can be automated using an API-driven solution. So again, it's part of your digital strategy. It's part of your growth strategy. Talk to your banker and see what is the best way to get these implemented. And most importantly, are they ready? And has this been tested? Okay, and not selling you something that is essentially vaporware. In the next few minutes, just before I wrap up, what I wanted to go through is really about, the 4 key points once again in summary, and to show you that for risk management, the bank usually needs a detailed understanding of all the flows. It is absolutely critical for them. For the payment company, it also means that a shared risk value and boundaries really enables and facilitates building a stronger relationship. In this case, everybody has a clear regulatory positioning, and it sets up the foundation for growth. And what does growth really look like? Growth means that the bank must be able to deliver true value in terms of commercials. Okay, whatever we give you, you must be able, to put it in a solution that will benefit your customers and you can make money. That is the ultimate goal, right? And the value is not only in terms of commercials and solutions, but it's also based on outcomes. It's based on outcomes that you're able to translate this value back to your customer, and our business can then grow in tandem. Again, symbiotic. Okay, we are not out there to say, oh, your payment companies are competitors and we shouldn't bank them because they will compete with us. Because what's going to happen is that the payment companies just go to another bank that's willing to do it, and a bank that is more open-minded and has a clear strategy on how to handle payment companies in the entire franchise. And we leverage on technology to really be focused around delivering the best solution for our customers. We build
I think we might have got some technical problem with Vincent's connection. Eunice, could you help to check in with him separately? Oh, Vincent, you're back. You're on mute.
Hello, hi.
Hi.
Got me?
Yes,
all right,
yes.
where did I lose you at?
At the part of commercially viable symbiotic relationship a bit, I believe, slightly after that.
Okay, got it.
You're not sharing the slides yet.
Okay. Alrighty, got that?
Yes, it's on.
Okay, right, so we're back. Okay, so really about the symbiotic relationship and how we can be symbiotic is really to leverage on technology. We want to make sure that the bank can actually delivers the best technological solutions for you. And these technological solutions are essentially driven.
Winston, you're on your notes slide, so it's not the presentation view.
Okay, hold on. Let me just get this sorted out. Share the screen. Do you see this?
Yep, got it.
Okay, I'm gonna put it on a slideshow now. Slideshow, cool.
Perfect.
All right, okay. I think my video is off, so I'll get it back on. Okay. Ready to go. Take 2. So for technology, it's really about the bank offering you the best that we have so that you can get predictable outcomes. This is very important because the payment company can then leverage on technology to really get ahead and scale faster. Predictable outcomes is what we are after because this is about resilience and efficiency, to making sure that you get replicable outcomes, because if you're handling scale, right, you cannot have any sort of manual handling that might derail your efforts to grow in that regard. The last part, just before I wrap up, again, constant communication, the most important element of all. We want to make sure that there's no guesswork between the bank and the payment company. And there are no gray areas and there are no gray positions. And everybody is totally aligned. This is very important for relationship longevity so that we are able to grow and co-create together. And you will need this from a bank, because a bank would have invested a lot of effort to onboard a payments company as a customer. So we want to grow together with you. And for you, you want to make sure that you select a right bank. And this is important for your risk management as well, because you cannot throw in your lot with a bank, and there are a lot of great positions. And because they don't ask any questions when they onboard you. And thereafter, when that happens, at some stage they say, oh, we got to exit you because we're no longer that big on payments company, or we're no longer big in supporting the money service business, that kind of a thing. So again, constant communication, enabling that trust is absolutely important. Okay, with that, I would like to wrap up my presentation, and thank you very much. I believe it's now, we have some time for question and answer.
Yes, thank you, Vincent, for the really comprehensive view of how banks see the relationship with payments companies, and how payments companies also should consider their relationship with banks. From my own personal experience in a payments firm, I think it's really relevant, and the points that you raise on communication and working together to co-create, it's really important. At this point, the audience, please feel free to ask your questions. Take this chance to get additional clarity, perhaps on anything that you would like to seek some clarity on, especially based on what Vincent had presented. Maybe, Vincent, if you could, take us through a more high-level consideration of where you think the future of banking would be, ahead of this particular timing. And in the meantime, if the questions are coming in, we can take this after the call as well.
Sure.
Yeah, maybe.
So I think the future of banking has been a question that everybody has an opinion on. Bill Gates, every world leader out there has an opinion on the future of banking. But I think certain things won't change. The trust between a bank and its customer, be it a corporate customer or a personal customer, and the relationship, that won't change. But I think what would change is the how a consumer or a company interfaces with the bank. That will change and will continue to change, right? I mean, just 20 years ago, internet banking was like rocket science, and right now we're talking about deep API connectivity, and how the bank will play a bigger role in your day-to-day life, right? How a bank can be more integrated into your daily lives, and this is important because it is driven by the need to stay relevant. The landscape is different. Everybody has a mobile phone now. We spend more time on mobile phones than on anything else, correct? And that's how the bank needs to adapt to stay relevant. And I think the usage, people have been talking about using data, using big data, using AI. Banks have done that, and banks will continue to do that. But I think the challenge right now is not about using it, but how to use it better. How does that translate into something that we can help your day-to-day, help a customer's daily lives, and with deeper integration? So I think that's where the future of banking is. Certain things will never change. Certain things will not change for 1,000 years. Relationship and trust. But the how will evolve. And this is absolutely necessary because banks just really have to stay relevant on that regard. And again, the usage of data and AI, not just using it, but using it better.
Thank you, Vincent. That was a great summary also for to also cherry on top of the description of what DBS currently is offering. So thank you very much, Vincent. So to the audience, feel free to drop any questions. We'll take them anytime they come. Let's see. Oh, we have one question. Vincent, so in light of new systems and approaches, for example, central bank issued coins, so I presume it's a CBDC, how will the working relationship between banks and payment companies change?
Well, I think the working relationship doesn't change much to that extent. It really depends. Firstly, I think it depends on the bank first and foremost. How does the bank see the change? how would a bank see the change, right? Would they see it as, okay, my business is going to be threatened and I'm not going to work with a payment company, or the bank will start seeing payment companies as a competitor because now there's no need for a bank anymore? That, a doomsday scenario in that regard. Working relationships will not change. But what I want to stress again, like what I mentioned during the presentation, is that we need to communicate. Okay, there is a need to absolutely communicate changes, communicate plans. We get it. Some plans are sensitive. Because of business sensitivities. We understand that, but communication is key because it builds the understanding and the climate of trust in that regard.
Great. Thank you for the question, Ming Wang. Yeah.
Right. I see another question, and maybe I think we got time for this last question.
Yeah.
How do you see the payment service industry shaping up over the next 3 to 5 years? What are some of the trends we can look out for? This is by Kian Singh. Okay, so I think we have undergone maybe a lot of a few versions of development and evolution. Correct. Payment companies have come in to say, okay, everything will be faster, everything will be cheaper in that regard. Some of the trends I think we can look out for is the increased usage of blockchain to deliver a solution. It's not that it's not being done now, but I think we will see a greater adoption for that. At the same time, I think there's also going to be a greater focus on outcomes. Outcome of a particular payment. I think sometimes banks, payment companies, we could be too focused on the technology behind that. But at the end of it, how does this technology really help someone? If you have a foreign worker in Singapore, correct, and he needs to send money back to his family in India, in Indonesia, in Hong Kong, or anywhere else in the world, correct? That's his hard-earned money. Okay, that's money that he has earned with his blood, sweat, and tears, for example, and he needs to get that money to his family. Can it be done in the fastest way with the best outcome? And it's not just on one side of the equation, but also on the other side of the equation, right? And the outcome is also focused around outcomes within the intermediaries and the payment companies and the banks that may actually be helping this process. So I think the focus is really going to be a lot about using newer technology. Okay, I don't know what is it in the next 5 years, because blockchain just 2 years ago, 3 years ago, 4 years ago seems to be a really big thing, but the adoption rate has been so much faster now. Everybody has a digital strategy, like the survey that we did has revealed. But I think what will be next is then I think the focus on the human aspect of it. How can we employ this technology to help people, right? So let's say, for example, if you have a big project in a developing country, building a big dam, for example, and when they build the dam, they're going to flood 50 villages out there, and then there are going to be 50,000 people that are going to be displaced. What is the kind of relief? I won't say the relief, maybe the subsidy, some of the funds that need to be dispersed. What's the best way to get to them, right? Would the local banks be able to do it? Would an international bank be able to do it? Would an intermediary be able to do it? So this is what it's all about. It's really about the human nature of the outcome. Thank you.
Thank you so much, Johnson.
Wow.
We have 1 minute
Very
left, I
interesting
guess.
question. Okay, quick one. This is from Bernard. Major payment companies are becoming direct members of clearing system around the world. Is this a threat to banks? On face value, the first instinct is to say yes, it's a threat, right? Because what we have seen is that we've seen a lot of payment companies, directly connected to clearing systems. They are behaving like banks, but they're not exactly banks. We get that. Are they competitors? Perhaps in some way. Are they a threat? I do not think so, because there's so much more element than just just being a bank or just being a payment provider in that sense. There is the element of trust, the element of building the relationship together. And for example, maybe some banks will actually then become a better partner with some of these payment companies. They are not exactly competitors. So I don't see payment companies as a threat to banks. In fact, I think it can be complementary. Certain payment companies can help banks access different parts of the markets that they traditionally do not have. And in the same way, banks can help payment companies access certain clients that they will never be able to onboard or reach to in a very short period of time. So again, I believe in the idea of symbiosis in this ecosystem where everybody wins together.
Okay, thanks so much, Vincent. So quickly, moving to the next speaker, we have Jan from Aspire. Please, Jan.
All right, thank you, Graham. Hi, everyone. Let me actually share my screen. Cool. All right, so you can all see my screen. All right. Hi, everyone. I'm Jan from Aspire. Today, we're going to discuss a little bit about cross-border payments and different banking services from a little bit more digital perspective, in a sense. So we heard someone from DBS. Now we're going to hear someone from a digital player, and then we're going to hear someone from another FeeTech new. Hopefully, you're going to get a sense of what are the main differences between the players and what can each of them actually bring you. So maybe just one word about Aspire and what we're doing. We're basically building a neobank, which is basically an all-in-one finance platform that offers additional services that just, I receive money, I want to hold money, and I want to send money, right? So myself, Jan, I'm taking care of the sales at Aspire, and I'm in charge of all the digital businesses and startups across the region. So today, the presentation is really going to be about, I would say, 3 main points. The first one, we're going to cover a little bit about what are the information, what are the facts that we know about cross-border payments in Southeast Asia, right? How is it working? What does it mean exactly? A little bit of facts, a little bit of market knowledge. Second part is going to be about what is the difference between traditional and those FinTech players, right? We all heard about those new FinTech players that are coming into the market, trying to disrupt this market. But what does it mean exactly? What are the main differences? Are they here to replace banks? Or are they here to work with banks just to make a better ecosystem? And the last part is going to be about the future of banking, especially from a FinTech provider such as Aspire, right? So really to better understand what they're trying to build, what is the long-term vision, and how do they want to move this forward. So let's start maybe with the first part about sharing a little bit information about cross-border payments in Southeast Asia. Right? And I just wanted to share this map because I think this map is absolutely wonderful. So it's about close to 600 million people in Southeast Asia. 70% of them are transacting online. 70%. In 2020, you have 7% additional, that's 40 million people that started to transact online. Right? We're talking about here, we just mentioned the 7 biggest countries. So it's 70. So every time you want to tap into a new market, there's going to be a different currency, payment gateways, and different charges. And I think this is really the key of Southeast Asia, is how Southeast Asia as a whole is going to be able to develop an ecosystem that will work for all of them, that will make everything faster, more transparent, and simpler for the client. So when you cover about cross-border payments, I would really divide it into like two basic words. One is transfers and one is cards. Transfer, I want to make a transfer from country A to B. What does it mean? How much am I going to charge? And same for cards, right? We're talking a lot about e-commerce because e-commerce is really driving all those digital spends, online spends, and cross-border payments across the region. But what does it mean exactly? What is the potential of this market? And the potential is actually huge, right? So to discuss a bit of a few facts. So the e-commerce boom in Southeast Asia is just going to explode. We're talking about 11 billion in 2017, 24 billion in 2018. We're talking up to 300 billion in 2025 for the overall internet economy. Internet economy means more and more cross-border payments. Again, cross-border payments mean mainly transfers and cards. How am I going to be able to transfer to purchase any good, how my clients are going to be able to purchase my good. Same on cards. How am I going to be able to accept cards from different markets? How someone in Thailand will actually pay me if I have a company in Singapore. This includes fees. The fees are usually up to 8%. This wasn't necessarily a topic for a lot of founders, a lot of companies, a lot of CFO before, but because of all those transactions that are increasing overall across the region, the topic of cross-border payment is becoming more and more important. And what we see, at least at Aspire, is that more and more people are coming our way because they want to learn more about what are the fees that are being charged, how they can actually save costs and better manage their spend. Traditional banks use a lot Swift. We're going to discuss a little bit about later on. Swift is basically the international payment network, which we think is very costly and not very updated. We can discuss a bit more later. Today, really what clients want is instant cross-border payments. And we see it more and more. I just seen now recently that with Pay Now, you're going to be able to pay and purchase goods directly in India. This is already the case if you want to purchase something in Thailand. And if you're going to purchase something in Indonesia, it will be the same. So the expectation of the client and the expectation of the customers is real-time payments. If I go somewhere, I do not want to pay in cash anymore. I want to pay most likely just using my mobile, and I want that payment to be instant. And ideally, I want the payment to be free or as cheap as possible. People are looking for two things today, saving time and saving money. So to discuss a little bit about Southeast Asia digital ecosystem, it's booming and it's going to boom even more. And again, it's spread across ASEAN is about 10 countries, 10 different currencies. So we need to find ways to make it better. The remittance flow is going to more than double within the next 5 years with about 18% growth month by month. And the digital payment is going to go by 15% per year, sorry. 15% per year. So what does it mean? It means that more and more, the topic of cross-border payments, again, how am I going to pay? How am I going to get paid at cheaper cost? How can I make my finance more efficient? Because it's all going to be about being more efficient, again, saving time and saving money. And to do that, there's a lot of different wordings that are used by the traditional financiers. And as to today, I think a lot of people have been confused by, okay, what are the transaction fees? Oh no, we're using the Reuters rate. Oh, we don't use any markup. We're using the spot rate. We're using the mean market rate. Okay, clients are getting confused. And nowadays, clients are moving towards being fed up with the traditional players. Main reason being is that they want to have more transparency. They want to understand. The cross-border payment is becoming something that is too important for them to just say, okay, and accept whatever people are telling them. So what we see, and again, this is really from people that are coming our way at Aspire as a digital player, is a huge gap between the current market and what the customers are expecting. The current market is extremely paper-driven. You need still physically to sign paper. With COVID, as you all know, it has been quite challenging, I think. I've been talking to quite a few clients that are telling me that they receive courier during 3 or 5 times per day that comes to the house just to sign a document and the guy leaves again to the next place. This is something that we think is relatively outdated. That offline process really of having a digital signature and to have to do everything using traditional paper, it's not going to work anymore. All those hidden fees, people want to understand today, okay, how am I going to charge? Why am I getting charged that fee? And people, I think customers can understand that financial players are charging them a fee for any cross-border payment or for anything else, but they need to understand the reason. And as long as you communicate and you understand, you explain the reason to customers, there will be a change. The long wait, again here, putting the SMEs at the centers of everything. How can I get access to my banking partner? When do I need to have access to them? It's probably when I need them the most. How easy to get access to them? Can I just pick up my phone? Can I just talk to them right away and chat? What kind of support are they giving to me? And this is really the current market and what customers want. So what customers want is really more mobile-driven solution. And to share a very basic example at Aspire, we decided to launch our mobile app about a year ago. We didn't really believe that so many of our clients will actually move to the mobile app, but a lot of our clients were actually asking to have a mobile app. Today, over 50% of the transactions that are to be conducted on Aspire are through mobile. So more and more people want to have access to the mobile solution, to be able to pay instantly and to be able to pay across different markets. When we talk about cheaper and faster transfers, this is a very important point as well. What does it mean? Today, I think that most of the traditional banks are using SWIFT as the way to make international transfers. The way I think fintech players are seeing, for example, SWIFT transfer, which is basically the international payment network, is you're sending a mail or you're sending an email. If I'm in Singapore, I want to transfer money to KL in Malaysia, it's probably going to take me 2 to 5 working days. In reality, it's going to be faster if I put the cash in my car and I just drive to KL. This, for a fintech player, it's completely updated. And our idea is really to make something that is much faster and much cheaper as well. Why do you actually need to make a transfer to another country when there's so many transfers between 2 countries from one day to the other? Can't you just basically balance the money that is in one country or one bank and release the same amount in the other, so the money doesn't actually need to cross the country? This is solutions that we've been working on. More transparency, again, in terms of fees. How much are we going to charge? Why are we charging such a high fees? And what does it mean, right? And least, but probably the most important, cross-border across 7 or 10 different countries. How are we going to be able to build a regional ecosystem? If today I want to use Pay Now, for example, in Vietnam, how am I going to be able to do that? If I'm traveling to Thailand, I want to be able to pay using my banking app. Instant payment, either through QR code or something else. So all the relationship between the different banks will need to involve. And this is really what customer wants. This is really feedback from our customers today. So now we discussed a little bit about what is the traditional market. We're just going to move to what is the traditional players compared to the neobanks or the fintech players. What does it mean exactly? Is one better than the other? Probably not. But everyone has their own selling points and everyone has their own market. What we see today from our clients is that there's 3 main pain points. The first one is the pricing. Very hard to get a transparency price. Do not understand why we're being charged and how we're being charged. Clients do want to understand. Second one is accessibility. How am I going to transfer funds? If I want to take my phone, make a payment, can it be done? Can it be done instantly? If there is several approvals, can it be done right away? And the third one, which is probably the most important for us, and I think for every bank in the next few years, is how do we put the customer again in the center of everything? How do we step back, sit down and say, hang on, why don't we actually build something that makes sense for our customers? How can we change the experience, the banking experience for our customers? And I think at the beginning of this presentation, I don't remember if it's Graham who mentioned it, that often with banks and with financial players is a love and hate relationship. It does not necessarily need to be like this. Let's sit down, let's hear what the customer have to say, and let's start to build something that makes sense for them. Something that makes sense for them is something more transparent, something faster, something cheaper, and more easy to use. So now, to discuss a bit about the frustration of business owners in general, is a very long wait in terms of the process to open an account, to make transfers, a lot of hidden fees, long waits. I want to get some support. I want to have the ability to be able to talk to my RM at the bank right away, or in a chat right away. I do not want to wait 1 day, 2 days, or 3 days, or I do not need to have the need to go to a branch to get the support that I need right away. And what we see is that more and more modern entrepreneurs want to get things done right away. They do not want to wait. If I want to make a transfer from country A to country B, I want to make it right away. I do not want to wait. And the third point is really about access to capital. So in terms of frustration, a little bit the difference between traditional players and fintech players on neobanks is the first one is in terms of account opening, right? We discussed a lot about the experience before. What's the difference? Today with fintech players, you can open an account within 5 to 10 minutes thanks to the integration. So when you log in, you basically register with YouMyInfo and we connect all the information directly from the website. So all those wording is all about getting faster, getting cheaper. The second thing is about hidden fee. How can we become more transparent? How can we tell the client and how can we educate the client on how they're going to be charged? And I think today more and more clients start to understand how does it work, how they're getting charged. And there's a lot of people that are frustrated by those fees because they do not necessarily understand those fees, but they understand that they're actually getting those fees. A very concrete example is on card payment in Singapore. Card payment in Singapore, how much do you think you were charged in the FX fee? So let's say if I'm purchasing something in US dollar, how much will a bank charge me on that? On average, the FX fee on cards in Singapore is about 3.5%. 3.5. So every time I spend with my card in a different currency than SGD, the bank will take 3.5% fee on the FX. And I think this starts to be a very big pain point for our clients, especially because people start to travel more and more. They use their card to purchase goods overseas. It's becoming really a pain point for all those guys, and they want some solution, right? Today, clients want to understand. They're not fine just to pay anymore. They want to understand. They have the ability to compare everything online, to have more transparency online. So they want transparency, but they want to have a better approach and a fairer approach. So I think with neobanks, there's really no hidden fees because usually it's very upfront, much faster, and integration with different payment gateways. In terms of FX, what is the difference between, I would say, traditional players and fintech players? We discussed a bit about Swift payments. I think it's all the topic of remittance companies. Why should we send physically money from country A to country B when there is every day so many transactions from one country to the other? Can we just balance, right? Can we just have let's say, a middleman that will, okay, I make a transfer from Singapore to a Singaporean account, and that company will release the same amount from the Malaysian account to my clients in Malaysia. Transfer can take 30 minutes. I do not need to send the funds to country A to country B. There is no intermediary banks involved that will take a fee. My transfer is much faster. My transfer is much cheaper. And this is all about the fintech companies, all the neobanks. They really want to integrate with as many remittance companies to just make sure that all those international transfers are just becoming much cheaper and faster. Card payments, I think we discussed about it, and I will let my colleague from NUM discuss a little bit more about card payment later on. But here again, it's all about educating the market about, okay, there's going to be more and more cross-border payments. More and more clients are going to pay using cards. How can I manage to have the cheapest FX on card? Because this is going to be very important for me. We're talking about 3.5% from traditional banks, talking about huge fees, right? So it's all about transparency. How do we approach it? How do we explain it to the clients? And how do we let the clients make their own decision? And I think this is the most important. And the last but not least is about the long wait and what kind of support. Right? My colleague previously from DBS mentioned it, and I think he's absolutely right about communication. How do we communicate with our clients? How do we build something long-term with the clients? I think today what client wants is to have access to their banking partner 24/7, not necessarily to their RM, but 24/7 to their banking partner. If I have a question, I want an instant answer, especially with the new generation. And I want to have a mobile experience. I want to be able to contact whoever I want and make whatever I want within a few clicks my mobile. How is that possible? How am I going to do that? It's just by interacting with the bank and making sure that they're actually building what you want. And the last point is all about integration. Okay, fintech players, they're all about integration. So what is a neobank, or what is a fintech player usually? I like to use the example of a hand, because basically it's the wrist and then they work with different fingers. Each finger is a different partner that is very specialized in what they do, that enable them to be much cheaper, much faster, and provide a much better, almost stronger experience to the client. In terms of accounting, how do I integrate all my solution with my accounting software? Is that possible? Is that going to save me some time? How can I access it? Once again, through my mobile app. How is my staff going to access it? Can I give an access to my staff to, for example, 100 staff to my bank account for card payment? And how is everything going to impact my reconciliation, which is probably the most important aspect if you're a CFO. I do not want to spend too much time in reconciliation. I need to find someone, a partner or several partners, because we believe that today someone should not have only one banking partner, they should actually have several banking partners. How are they going to all work together to facilitate my reconciliation? And this is all about the concept of future of neobanks and how fintech players are seeing really the banking ecosystem moving forward. And at Aspire, this is how we're seeing it, is to build an all-in-one finance platform, what we call, where we put really the core banking at the center. And core banking is what you know is all about, okay, I want to have an account in SGD, I want to have an account in USD, I want to be able to receive money, I want to be able to send money and to hold money. But what if I had the ability, for example, to have an account in 10 different currencies? So I do not need to always make cross-border payments. I just can simply convert right away to avoid any FX fee, any international transfer fee. Right away, I can transfer from one currency to another. How am I going to be able to have several accounts? I have my main account, but I'm managing 3 different brands. I want to have a sub-account for each different brand. Again, here, the topic, how it's going to help me to save time, to save money, and help me in terms of reconciliation. Now, the way we see it is then, okay, this is the core banking. We want to involve a little bit and divide it in 3 different parts: spend, revenue, and treasury. We're going to have more and more cross-border payments. Those payments are going to come either from transfer, either from cards payment. How are we going to manage all this? How am I going to manage my spend? How can I manage actually my entire team using one app? Can I actually create different cards? Can I actually create different cards in different currencies? If I'm a Singaporean business and I'm purchasing in product, let's say in Vietnam, I'm purchasing products in China, in Europe, can I have a card in Europe? Can I have a card in Vietnam Dong? Can I have a card in Indonesian rupiah? So I do not need to pay those FX fees. How am I going to manage my budget? Or how am I going to manage all my invoices? I want to get paid. I want to get paid, but make sure that I'm going to pay it at the cheaper cost. I do not want to pay those international fees. So ideally, I want to have a partner that is across the region, that is able to provide me and support me all over the region. And the last part, which is probably the most important, is how I'm going to do all my reporting, how I'm going to do all my forecasting, because I need to know how much I'm going to get at the end of the month and how much all this is going to cost me. Am I going to be able to do FX hedging? Can I convert from one currency to the other right away without needing to make a transfer from company A to company B, which takes 2 to 5 days? This is all the aspects that traditional neobanks are working on. And on top of that, it means integration. So we started with the core banking. Then we thought about what can we do in terms of spend management? What can we do in terms of revenue management, treasury management? And then how can we integrate with additional partners? How can I actually integrate with my payroll? How can I have my payroll, everything done through my app? If I have clients, if I have employees that are all over the region, I want to be able to pay them much faster at much cheaper cost. How am I going to add different wallets? I want to get paid for my clients. I'll need to get integration with those guys, Google Pay, Apple Pay. User and access, how can we build that? Communication, same, and so on and so on. So accounting, what does it mean? I need to make sure that all my accounting is directly integrated all my payments are directly integrated in my accounting. Again, here we're looking to save time and to save costs, especially if I have lots of cross-border payments. CRM, payment gateways. All this to say that it's all about what is your banking partner going to provide you? What is the vision that they have? How far can they actually support you? And I think really the discussion about today is really about what customer wants. In terms of cross-border payments, what are the options that are available in the market? How am I going to be able to save time? How am I going to be able to save money? But more importantly, I need to choose a partner that is actually transparent. Now, I'm not here to say that fintech are going to replace banks. I don't think that this is actually going to happen. I think fintechs and banks are going to work very closely together to make the entire ecosystem better. What we're saying here that the customer will be, again, at the center of the attention. They will require more knowledge of the market. There's going to be more and more fees because different currencies are involved, different countries are involved. How are we going to facilitate this and how are we going to make the experience better and improve the entire ecosystem for SMEs across Southeast Asia? Thanks a lot. I think that's about it. Graham, I'll leave it to you.
Hey, thank you so much, Jan. For the introduction, also reintroduction and covering what the payments landscape is like. I think it's good for us to revisit this sometimes and to be reminded about the things back to basics as well. So we've had a good session so far with Wonson covering things about infrastructure and how the relationship between banks and NBFIs and corporate customers in general, and then having Jan to also share with us about the payments, the whole and the NBFI landscape in more detail as well. So with no questions, I think in the interest of time, let's go straight to the next session. And we can take the questions after both sessions as well, after the next speaker as well. So Malik, please.
Yep, thank you. I'm hoping that you guys can see my screen and I'm audible.
Yes, we can.
Yep. So thank you, Graham. Good afternoon, everyone. Thank you for joining the session. It's wonderful to speak with you today. There are two segments to my talk today. One is to just briefly present what NIAM is and what it has to offer, so you understand the context of the second segment of my talk, which is to talk about the embeddable fintech infrastructure, or often called as banking as a service platform. And we will explore some use cases where BaaS can be seen in action. And at the end of the talk, if you have any questions, please, I'll do my best to answer them. Just a brief introduction. NIAM was basically born out of a mission to simplify the payments experience for consumers around the world. It launched the payments options for consumers, businesses, to provide fast, safe, and easy money transfers to families and friends abroad, and gradually became a company which not only catered for C2C, consumer to consumer, but also to B2B and other forms of payments processing, in effect processing billions of transactions every year. The core part of NIAM's scale and success is the payments platform that we would talk much more in detail. So it's all powered by one API. So you can see a range of clienteles from banks to non-banks, marketplaces, fintechs, and so on. We will talk a little bit more in terms of how the phenomenon of embedded finance or banking as a service has played a crucial role in this. And NIAM's coverage in terms of its geographical and payment service breadth, every day we try harder with a single-mindedness to help the clients to reach in terms of their payments, collections, and send. We not only rely on our partnership with banks and other entities, we build our own portfolio of licenses and principal memberships and associate memberships with schemes. So it's more than just a play of a tech plus licenses, plus we eat our own food in terms of building and offering our products. In essence, this is the history, and this is a perfect segue for me to get into the discussions around embeddable fintech infrastructure. So as you can see, one second. Yeah, as you can see, the platform for pay-in, pay-out, and card issuance really allows our banks and payment providers, travel companies, and other businesses to collect and disperse funds in local currencies into many countries. So we enable companies around the world to unlock revenue opportunities and improve cash flow by enabling new services to be launched in record time. So this is the connection I have with the topic on hand. I believe that the term embedded finance or embeddable fintech infrastructure or embedded financial services, which were terms that you would have come across, was first technically registered and made popular by someone named Angela Strange at Andreessen Horowitz, if I'm not wrong, when back in 2019, November 2019, I guess, at a summit hosted by Andreessen Horowitz, that she was talking about a foreseeable future back in 2019 that every company would become a fintech company. Now, hindsight, when I'm thinking about it, companies, including NIAM and many others in the industry, had been at that frontier already, to leap on the unbundling and rebundling phenomenon to embed finance for some time. I mean, it's already there happening. In fact, like when I look at the discussion panel today, a sample of this phenomenon is easily witnessed right within this session. Aspire, NIAM, and DBS, however different they are from an industry perspective, they are interdependent and help each other. Someone mentioned about co-creation. That's really happening. If you look at what is in the Aspire product, you would see certain participations from NIAM. And if you look at what NIAM is, you would see some certain participations from DBS. Such is the power of openness and collaboration that you can witness today. So banking as a service, BaaS, or embeddable fintech infrastructure is truly bringing together several elements such as send, receive, cards issuance, and is really poised to set the stage for many interesting scenarios, including crypto, investments, bill payments, credit, buy now, pay later, and so on and more, all accessible through one unified platform that the fintech or non-fintech clients can truly build, or embed right within their existing value propositions. So I have a famous example which I worked on in one of the projects myself. This is a ride-hailing company in a developed nation, so you can understand the drivers come and work from other developing nations. They get paid on a monthly basis or every 2 weeks or monthly basis into their bank, and they will have to withdraw the money, stand in line to send money back home. It's an opportunity where this ride-hailing company wanted to embed a financial services options right within their existing driver-facing mobile application seamlessly. It's not like two different apps. So the drivers can get paid into that embedded wallet within the app every now and then, every 2 days or 3 days. And the money gets accumulated in the wallet. The driver has the ability to withdraw anytime they want to. They have a card attached to the wallet. If they want, they can send money back home. They are from Indonesia, Malaysia, or Thailand. They can do a cross-border remittance all from within the ride-hailing app. So that's the beauty of breaking down the barriers of different industries and how this phenomenon of embedded finance can be more progressive, right? So we will delve a little more into this BaaS or banking as a service or embedded financial services infrastructure product story from NIAM, but it should be relevant in general in the next segment. As you can see, this may look like a complicated diagram, but this is what I'm building. Literally, like I'm involved in the product development side, and pretty much more like a generalized banking as a story in the industry. You can look at many other players, Rails Bank, Rapid, and many well-known embedded fintech infrastructure players. What you can see is really an unbundling, a delayering of several services here. At the bottom of it, to differentiate between a pure technical service provider, like for example, a core banking platform or a core payments platform, they are no more than a software that the banks will have to plug in and add more to it. What we are talking about here is a software as a service, more than software as a service, is a turnkey software as a service, if you will, which comes packed with licenses, partnerships, memberships with schemes, neatly powered by a composable set of building blocks. So any client that wants to, let's say, as I said, power their existing value proposition with a select set of services, they can work with some of these players, NIAM or anyone else from a banking as a service context, and easily and seamlessly bring in those value propositions. So Aspire is one good example to, let's say, power their value propositions in terms of issuing. And as you can see, we will look at some other case studies as well. So the clients can actually build their capabilities, add the value propositions by plugging in the components, from certain service providers. So you don't need to be like a monolith in terms of all or nothing. You can be focused on your core competency and then plug in the components from others. That's the whole point of this unbundling and rebundling. So as you can see, a typical framework would lay a lot of emphasis on a compliance as a service, which focuses on how to de-risk in this world, like as we heard in the first session, risk, and risk. So there you go. Any solid player in this space would focus on how to de-risk, how to do proper KYC, KYB screening, and so on. And then we talk about a number of transaction types. In the picture, you see the send side, the receive side, the cards issuing, and so many other transaction types. All or should be built in a composable manner, accessible through APIs. And that's how we make life easier to the clients. So this is not just a diagram that I'm trying to go over. This is the real architecture that as I speak, I am involved in developing within and is perfecting within NIAM as we speak. It's an existing one in NIAM, so it's not something like a theoretical diagram, if you will. So let's go to the a typical program. So what we had seen before was an architecture sort of diagram, but just to keep things simple, I have created a simple diagram for you to visualize. So imagine that I am that ride-hailing company that I was talking about before. What happens in this context of a banking as a service platform is it usually is a multi-tenant platform. Like if you explore in the industry, they don't have like a bespoke solution for every single client. So it should be capable of onboarding and supporting a wide range of global clients at any given time. So within that platform, what we're talking about is, let's say, onboarding that ride-hailing company and setting them up with a program, so that like the program is like a mini universe. So BAS, this platform story, gives you a concept of a multiverse. So within that single platform, you are able to host and operate several programs. Of course, all ring-fenced, well secured, so you don't see things go hayway here and there. A typical program here, if you visualize, this is a ride-hailing company which wants to embed its financial services. At the top, you see the client, which is the ride-hailing service, and then they can onboard as many number of customers. So here, individual, which is the drivers. So you're onboarding them and giving them accounts. So of course, through the KYC screening and so on. So, and as you can visualize, the value that gets stored is within that multi-currency wallet. And then the same account balance you have can be utilized for spend, which is cards issued, and then they can send money home, cross-border, or domestically, like in, let's say, in Australia, or they can even, let's say, receive money. So what you see is a typical program that made use of the certain capabilities that we saw in the previous slide. Yeah. I will just move on and we'll talk about an interesting case study, which is marketplace. Again, it's just one example. We have, if time permits, we'll talk a little more in the Q&A. So this is an example of a marketplace. As you can see, the left-hand side, it could be any marketplace like Upworks, 99 Design, and so on, which tries to bring together somebody who wants to pay, meaning who wants to give work, and somebody who wants to get paid, who is actually doing the work. So in this example, what you see is let's say we onboard such a business which wants to, again, embed this ability to collect money from the businesses that want to pay to the individuals to whom the money needs to be paid, the freelancers or whoever. So in the platform, in a typical banking as a service platform or embeddable fintech infrastructure platform, anywhere, again, NIEM or any other company for that matter, you would typically find this constructs of, let's say, onboarding the business. And again, KYB, screening, and the whole 9 yards will need to be done to be compliant. And we will also onboard the ones to whom the money needs to be paid, as you can see on the right-hand side. And once we onboard them, the beauty is you can pay within the platform. Therefore, let's say if it is trickling amount of payouts, like weekly you pay about $100 or $200, you don't need to be paying them always through the bank transfers. You can let the money get accumulated to the individuals within the platform, and therefore you save the money. I mean, it's like a peer-to-peer transfers happening or a book transfers happening within the platform. And then at any point in time, the person who is actually receiving the money can take the money out. So that's the way in which you're trying to optimize the expenditure from all the parties concerned. And of course, if you don't want to onboard anybody like individuals into the platform because that may require some KYC and screening, then obviously the business partner can use the platform to send the money out using the banking rail. So just as an example, and we saw the platform, we saw a typical program, and this is, you may say, a representation or a case of how the BAS platform could be used. The last slide that could conclude my discussion and our case study again is we have few interesting remittance clients. So as you can imagine, the remittance companies or remittance clients would do their own customer onboarding. They would do the KYC and so on. So the way this platform would help them or is relevant for them is to help them with additional reach to different parts of the world. So they could make use of us We onboard them. It's a very simple onboarding and setup. And they could make use of the pre-funded balance and use that as a means to extend their reach, the payout reach. So it's just behind the scene backend network plumbing activity, if you may say. Not as interesting as it will be if it, as you had seen in the marketplace or embedding financial services in a non-FI or a non-fintech case. Nevertheless, it also has relevance when it comes to cross-border payments and how we help such cross-border companies to extend their reach. So I wanted to keep it brief as we would run out of time today. As we discussed today, what you see the embedded finance, which depends on whom you ask. Someone will say $200 billion industry, or suddenly they will say $7 trillion industry. But whatever it is, there is a lot of room for everybody to come together, work together, collaborate like we do, like in the same panel that we see TBS, Aspire, NEOM. There is always a room for everybody to play. What I had seen, this democratization from the phenomenon of open banking and banking as a service, which are two different things, are doing is really opening up opportunities and in the process helping clients and customers to get better and better experience. So with that, I'm done. Graham, up to you, sir. So whenever, if any questions, I'm happy to take them.
Yes, thank you, Malik. It was a really good and detailed look into how each different use cases can be viewed from a technical perspective. I think this really was a good roundup from how all our three speakers really gave us a very broad perspective of from the ground all the way up to the macro perspective of the industry. So down to the audience, do you have any questions for Jan? We skipped his Q&A earlier, so we can go quickly. And for Malik as well. And if you have any questions for earlier as well, please feel free to voice them out. Now would be the time. Okay, maybe in the meantime, we still do have some time left. Really, the question will go out to both Jan and Malik. Where do you see the future of banking to be?
You want me to answer that, Jan?
Go ahead, because I think I already covered a little bit during my presentation. So go ahead, Malik.
Yeah, I think I hinted it in the last few minutes. Whether we like it or not, the future is about more openness. Whether the regulator is forcing the banks to do or banks themselves do, I think that's a healthy direction that everybody is heading to. In the history, I think we have this telecom becoming a dumb pipe, and then you have Netflix and so on coming into picture, but not so true for banks. Banks fight back in the industry. For example, as recently, even though NatWest did something and folded back, but Goldman Sachs and JPMC are fighting back again in the UK, giving Starling Bank and others the run of their money. So my personal view is that there is still a lot of room for everybody to grow. For personally, from a banking standpoint, regulators are taking point in terms of easing a bit, not so much easing a bit from a regulation, making sure that openness is achieved, creating space for more players to come in, and leading innovation to happen. Singapore is one best example in that sense. Europe has taken that lead. US is soon following up, and many of the developing nations, Indonesia for that matter, and so on. So this phenomena is something I believe will be helpful and cannot be avoided.
Yes, thank you, Malik. Totally agreed on that. Especially with the new Payment Services Act. I mean, it's not so new, but as we all know, it just came out last year. So So lots of innovations occurring, and look forward to seeing how everyone adapts in the industry as well. We haven't had any further questions come in. I'll be wrapping up in 1 minute, but if any questions come in, we'll jump to the questions. Thank you all for your time, especially not just right now, but the time, the effort to put into to prepare the presentations that you have. We really appreciate it. We hope that these sessions that the SFA, the RAS SFA committee is organizing, helps everyone to get a better idea of what's out there and how to improve, our capabilities from a technology perspective. To the participants, we have a survey that will come up when at the end of the call. Please take the time to put in your thoughts and to share with us what else you want to hear about in the next upcoming calls, upcoming webinars especially. We will want to hear your feedback and to give you the best kind of experience and I would say knowledge sharing in this current industry and the current climate. So before we end, maybe I just open the floor to our 3 speakers again. If you have any last words to put in.
Yeah, just one thing. I think Winston here. I think I share my views with Malik. I think the market is big enough. I think there's room for everyone to be a meaningful player in the whole ecosystem. And I think again the theme of symbiosis, I think, is a good measurement of the maturity and the health of the ecosystem.
Yeah, agreed as well.
Yeah, and maybe one word from my side is just for whoever will actually attend this webinar, just feel free to speak up with your bank, feel free to speak up with your partner, tell them what you want, tell them what you would like to have moving forward as a banking partner or as financial needs, and build it together, right? That's super important that people speak up to tell exactly what they want so we can build it for you.
Yeah, my last thought is actually in 2 decades, everything has become so from complex to become simple, and technology applied in the right way is actually making life easier. So as you can see, a lot of fintechs cropping up and starting their own stuff that wouldn't be possible before. So it's delighted to be presenting in this forum. It's the right audience. Looking forward for future sessions as well. Thank you.
Thank you very much, Malik and Winston and Yan as well. The video for this call will be on the SFA YouTube site within 2 days. So if there's any points you want to revisit, please feel free to subscribe to the SFA YouTube page. Okay. With that, again, thank you everybody, and I hope to see you next time. Bye-bye.
Bye-bye.